you working on Janet Yellen's Fed yet?
I haven't quite got there yet. I'm only on page one. So
page one of it, waiting to see 6 more meetings for the chairman. That really caught me. Mike, I think you had that number earlier today. 6 more meetings for the chairman, and we're really coming to the end of a presumed end of the term.
End, yeah. I mean, you know, he's had a great chairmanship. He's had to deal with an incredible set of crises. He's going to be a hard person to replace, hard shoes to fill.
When you look at this release today, is this too much information? Are we getting too much transparency within our microanalysis of a statement, and then we go on to the frenzy of the minutes in a number of weeks?
Yeah, I mean, this is a placeholder. The Fed's not ready to do anything new here, so they're buying a little bit of time. So they need to acknowledge the economy's a little weaker, acknowledge that inflation's a little low. But this is not a big deal. This is there's no big message here out of the Fed.
I look at unemployment, Michael McKee. I noticed the phrase Peter went to, moderate improvements in unemployment. That moderate word really signals this isn't good enough for the Fed, is it?
Well, that's been their signal. What's interesting in terms of what Ethan was saying is how optimistic this statement is compared with perhaps expectations going into it. And you can see that reaction in the bond market right now with yields going up. They really didn't walk back their description of the economy. They are using pretty much the same language. The economy is expanding at a moderate pace. Labor market conditions have shown some improvement. And the only blame they place for a slowing economy is on Congress and the president, where they say fiscal conditions are restraining growth. A specific shot across the bow there. And I was surprised there's really no change. There is no change in the inflation language. They're not acknowledging that they've got a disinflation problem at this time.
We got some special charts for you. Bring up the inflation chart right now. Let's rip up the script and go to this because, Ethan, you've got a double-barrel call off what Michael just said of an inflation mandate and a jobs mandate. The bottom line is it's about the real economy, but you buttress that with low inflation. Suddenly disinflation and the core PCE deflator, a favorite of people like you, is off a cliff. Is that safe to say?
Well, I think that, remember that the Fed doesn't react to 1 or 2 months, and we've had 2 months of weak data, so it's too early for them to get really alarmist about the weakness in growth. But we think going forward that they are missing on both mandates. Remember, every member of the FOMC, Hawk, Dove, Uber Hawk, Uber Dove, every single one wants 2% PC inflation, and it's only running at about 1%. So they are missing significantly on their inflation target. And as you mentioned before, they're missing on unemployment. 7.6 is too high. So I do think you're going to have a more cautionary statement out of the Fed going forward. They're just not yet ready to acknowledge the shift in the economy.
Basic question, and let's discuss this. Does sequestration, we know that affects the real economy, does sequestration affect price change in America? Do we have more disinflation because of dumb fiscal policy?
Well, I think it's delaying the recovery. It slows the economy down, keeps that unemployment rate from coming down quicker, prevents the re-energizing of wages.